All right. My name is Chris Campbell. I'm a practicing CPA and I work with small to mid-sized businesses, individual to help them pay the least amount of tax as possible, keeping them out of jail. So today I wanted to talk about 401k contributions, especially for those that operate closely held businesses. So see this a lot as corporation owners, as you already know, it's a good setup to have as an opportunity to reduce taxes and put away money in retirement and a way to reduce your tax liability. So, and I ran into this situation the other day, is when there was a excess of contributions, because when you contribute to the 401k, and it's a great way for business owners to shield income from taxation. However, there are limits as far as how much that can put into these accounts. And what tends to happen, and this happened recently with one of my clients, that they contributed too much. And when you contribute too much, there are consequences that come with that. I figured it'd just be good info to share as far as what are the limits that you have associated with that. And then what do you do go over, and what can happen if you go over. What I really like about the 401k is that as a business owner, you can contribute on both sides, right? So you contribute to your 401k as both employee, because as the owner, you're operating out of an S corp. You are technically an employee of your company. When you have an S corp, you can make your contributions as a employee, and then you can also make contributions as the employer. So it's actually two different sides. So it allows you to put away a good amount of money as an owner and to defer that, right? Because you don't get out of the tax free, but it's deferred, right? The idea is that when you defer the income, you'll take it out of retirement. And the idea is that you'll be in a lower bracket when you retire than when you are actively working. Good way to defer income. So you have two options to make contributions. So you have two methods to make contributions: as an employee, which the limit, at least for 2025, I believe it's 23,500. So you can take the salary that you're receiving and defer that much. So you can say if your salary is 50,000, and defer, put half of it in, right? 23.5, and you're only going to pay tax on that 23.5, right? Now, the other side of it is you can make a contribution as an employer, which is called the profit sharing contribution. So you can contribute as an employer up to 25% of your salary into the 401k as an employer match or profit share. So if we use the same example as receiving a $50,000 salary, you can contribute as an employer 25%. So what does that come out to? 12,500. You can contribute 12,500 as an employer contribution and add that to your 401k. So all in all, you would have the $23,000 salary. You can contribute 23.5 plus the 12.5. So you contribute up to 36K over $50,000 out. It's pretty generous that you can do. Now, do understand that when you are doing the employer contribution, that you have what's called non-discriminatory compliance, meaning that if you do that 25% salary contribution for yourself, you have to do the same for all the rest of employees, any other employees that may qualify. So it's tough to do the employer match when you have a good number of employees that's been with you for a while, because usually if they've been with you for a while, they can usually qualify. So you may be okay with contributing 25% of your salary to yourself, but you might not want to do that for everybody else that's working for you. So one of those things with that percentage, if you do it for one, you got to do it for the other. So you have to watch that. But if you are, say, a sole employee, then this works great for you, because when it's just you, you don't have to worry about others. So that's one thing that you have to keep in mind when making that contribution. I've seen a couple of times where they've had the employees and they've made that match, and they didn't want to do it for everybody else, so I can create a problem. So again, that's an instance where they went over and they shouldn't. So that creates one error. Then you have a circumstance where they did contribute to everybody who they wanted to contribute to, but they were limited by 25% of the salary. So they went over 25% of the salary with the salary match, or they withheld more than the 22.5 that they were supposed to withhold from their salary. So that can create another issue for contributing. Now, there's another situation where there is a max that one could contribute between the employee side and the employer side. Now, I want to say it's 69,000. That's what's in my head, but there is an overall limit dollar amount that one can contribute, and that's like across the board. And like I said, I want to say it's 69,000 in any given year. If you add up all of your contributions between on the employer side and the employee side, it's over 69,000, then you're in excess. So you got to fix it. So those are the limitations that you have. So sometimes when I tell clients they can do this 401k and tell them about the contributions, sometimes they don't take those into consideration and then they go over. But a lot of times what I see is they go over because he did not know or didn't remember that they had to do it with another employee, especially if you're a business that's growing. And then you're bringing on employees, but then you're still doing the same amount of withholdings or contributions you've done without employees. And then you forget that you couldn't do it now to bring people on. So that's another source of going over the allocated amount. Now, in the event that you do go over, there are some solutions to fix. But if you don't fix it, then there are some penalties involved. If you catch any errors that you've made or any over contributions that you've made prior to filing a return, if you catch it, the fix is contact your administrator and telling them to withhold, to take the amount out. So you know that, okay, hey, look, I went over $5,000 or so, whatever the amount it is. Just contact the administrator, let them know, and then they'll withdraw it, and then they'll send it to you. And then you'll have to report that part as income. Unfortunately, you're not allowed to roll it over. So let's say if you realize the error and you say, okay, I'll just roll that part over and just have it as a tribute for a contribution for the next year. Unfortunately, that's not allowed. You do have to get it back from the administrator. So as long as you do that prior to you filing the company tax return, then you're okay. They'll send the money to you. Now, if there's any earnings on it, so let's say they was a good 5-6 months between the time we get it out, whatever the earnings were on that time, then they'll pay that out to you as well, and then all of it will be you. So you have to report the income. Now, in the event that you don't catch it in time, and then you realize there's an excess, so there is a penalty of excess contributions. These about 3% a year on the excess. So if you were to put in 5,000 more in this instance of what you were supposed to, and you don't catch it in time for the return, then you have to pay an additional 3% tax on that excess contribution. So you pay the excess on that contribution, and then actually you'll have to keep paying it the 3% every year until you actually pull it out. So you do eventually want to fill it out because the 3% continues to add up. So make sure that you go ahead and do that. So make sure you go ahead and do that. So that's pretty much the long and short of it here. But moral of the story here is that you really just need to make sure if you're participating in the 401k and you're really trying to max out, you're really trying to max out those deductions on the 401k, then just to make sure that you're required to make sure that you check your rules to make sure that you're not over contributing, because it could cost you a few dollars in the end, and you're not getting the deduction that you're about to get. So make sure you just stay on top of those limitations and the ability to fix it and catch it. All right. So that's all I have for today. Hopefully this was helpful. And yeah, if you have any more additional questions about this topic or any other tax or accounting related questions, feel free to reach out. I'm happy to help. All right. That's all for now. I'll talk to you in the next one.